Jonathan, can you hear us?
Hi, Roseanne. Yes, I can
Oh,
hear you.
excellent. Can you even see us?
I can see you. Actually, I can't see you at the moment, but I can. I
Oh.
can see you now. If I look in the corner of the screen, I can see you.
We're a little
Hi,
bit
hi,
in the
Roseanne. Hi,
corner.
Nick.
Hi.
Right.
Great. Well, welcome, Jonathan. Thank you so much for taking the time to join our Strategic Planning Committee meeting today. So we're also joined, we've made this an open session, so it's not just members of the Strategic Planning Committee, but also other delegates that are attending our meetings here in Sydney. So we're a few hours ahead of you. Friday is almost done for us. You still have a Friday to get through.
Between you and cocktails.
So first of all, Jonathan, thanks very much for joining us. And for those of you who do not know Jonathan, I'll give a little bit of an introduction. He is the Secretary General of the International Association of Insurance Supervisors, to which I'm the officer liaison, and Nick is our relationship manager. He's held that position. This is Jonathan holding the Secretary General position since November of 2017. He's had a long association with the IAIS before he became Secretary General. He was a member of the Executive Committee from 2009 to 2017, and he also served as chair of the Implementation Committee from 2012 to 2017. So he kind of was involved in putting it all together. He's also chaired the Governing Council of the Access to Insurance Initiative, which is a key program that we've been part of, which is around the development with development partners aimed at strengthening responsible and inclusive insurance. And Jonathan Fred Rawley is here with us in the room as well. He has been an important contributor from our side to the A2IA program. So before joining the IAIS, Jonathan was the Deputy Executive Officer of the Financial Services Board in South Africa, which is, of course, where the capacity in which I first knew Jonathan. He was responsible there for insurance regulation and supervision, and he was appointed to that position by the Minister of Finance in South Africa in 2008. Before that, he worked for 10 years for the National Treasury in South Africa on economic and financial sector policy issues. So Jonathan holds a master's degree in economics from the London School of Economics and a bachelor's degree in economics from the University of Cape Town. So he's well qualified to address this group. In fact, we're really honored and privileged to have you address us today, Jonathan. So I think you're going to start off with a little bit of an update from your side, and then Nick and I are ready to ask you a few questions of topics that are relevant for our profession. So over to you.
Oh, that's great. Thank you very much, and very nice to see you, Roseanne and Nick. Even if just virtually, I would have much preferred to have been in lovely Sydney and saying hello to all of you, but a lot on the go at the moment. We'll also have our meetings coming up in 2 weeks' time. But very happy to have this opportunity to talk to you about really to kick off talking a little bit about our work and what's going on at the global insurance supervisory level at the IAIS, which I guess no surprise has a lot of similarity with the impressive range of issues that you're covering in your council and committee meetings and at the Congress next week. So I thought to kick off, I'd say a few brief remarks on first of all, maybe an update on the momentum we have towards finalizing the Global Insurance Capital Standard, or ICS, and then pick up some points on our holistic framework, which is our framework for systemic risk monitoring and macroprudential supervision, and finally touch on some of our other strategic themes and key projects. So let me start with the ICS, which I think is probably familiar to many of you, and I guess this is really the sort of remaining piece of many years of work that we've been busy with to build a global framework that is suitable for the supervision of global groups, or what we call internationally active insurance groups. And that's what we call COMFRAME. The full name is the Common Framework for the Supervision of Internationally Active Insurance Groups. And we completed the qualitative aspects of that in 2019, the governance, risk management side. So what's left, and we're almost there, is the quantitative part, so the capital and solvency elements around ICS. And as some of you know, it's been a bit of a long and winding road for the ICS, now 13 years into this project. But I'm glad to say our members have kept the faith, and we are almost there. And if anything, the events of the last few years, including the global pandemic and now the turbulence that we're seeing in the global economy, has really highlighted the significance of global coordination on insurance supervision, and particularly the importance of a common language for the supervision of these internationally active insurance groups. So thanks to the extensive data gathering and analysis that we've undertaken on the ICS and the 5-year monitoring period that we're currently in, it's probably fair to say that the ICS is one of the most observed and empirically driven and consulted on international financial standards. We've benefited from data and technical input provided by volunteer insurance groups that have actively taken part in the monitoring period from across the world, representing about 1/3 of worldwide life insurance business and about 1/4 of non-life business. In total, we've collected over 4 million data points over the last 3 years. We've also received feedback from discussions in the supervisory colleges of these international groups on the performance of the ICS. We've conducted many workshops with volunteer groups and with supervisors across the globe. And then, of course, as I say, recently, the COVID-19 pandemic and the significant market movements have provided a significant body of evidence to understand the benefits of the framework. So I said, we're almost there. The endpoint is what we call ICS as a prescribed capital requirement, which will then be the, if you like, the minimum standard for regulatory capital requirements for these groups around the world. And next month, we will be launching our formal consultation on ICS as a PCR. And that will be launched for a 90-day comment period. So this is a significant milestone. This is our consultation on what we see as the candidate ICS as a PCR. So our best bet of what the final product will look like. And given our focus on evidence-based policy, this candidate ICS as a PCR also forms part of this year's ICS data collection, along with the continued collection of our reference ICS that we're using in the monitoring period. And that's in order to maintain a time series and understand where the differences are coming from the changes that we've made to the candidate ICS, or whether due to business cycle changes. So this will then allow us to undertake, if you like, a last road test of the ICS before it's finalized next year. So taken together, this data collection plus an economic impact assessment that we're doing this year, and the ICS public consultation that I mentioned, all of this will provide a significant body of evidence to inform our final decision next year. So increasingly, our attention is now shifting to preparing for the implementation of ICS from 2025 onwards. That includes discussing with members their plans for implementation, including in the form of the aggregation method in the US, timelines for the assessment of the comprehensive and consistent implementation of the ICS, and any transitional arrangements. Also to mention that as part of this June consultation package, we'll launch a consultation on revisions to 2 of our insurance core principles, or ICPs, namely ICP 14 on valuation and ICP 17 on capital adequacy. And these changes to the ICPs, as you know, apply universally to all supervision of all insurers. And taken together, these 2 ICPs, they form the foundation of the ICS, but they've also now benefited from the work put into the ICS. So on this topic, I guess I'd encourage the IAA and its members to engage with the consultation when it comes out next month. And we want input from as wide a range of stakeholders as possible, but obviously as a professional organization, you're especially equipped to comment on the technical aspects of the standard. So we very much look forward to that. Let me now turn to the holistic framework, which last year we completed a 3-year implementation of this holistic framework for the assessment and mitigation of systemic risk in the insurance sector. And I thought I'd touch on this because of the strong overlap with the risk management aspects of the IAA's work. So we saw the endorsement of the holistic framework by the Financial Stability Board in December last year, where it concluded that the holistic framework provides a more effective basis for assessing and mitigating systemic risk in the global insurance sector than the previous approach, which was the process of identifying global systemically important insurers, or GSIs. So in particular, we found that firstly, the systemic risk assessment through our annual global monitoring exercise, which is a key pillar of the holistic framework, has proven to be more comprehensive and forward-looking and versatile in terms of crisis. And this is a very comprehensive global monitoring exercise. We collect data from about 90% of the global insurance sector. So it's a very rich empirical basis on which to discuss these risks. Secondly, it supports a more robust collective discussion among supervisors around the globe on the potential buildup of systemic risk and appropriate supervisory responses. Thirdly, through the holistic frameworks, enhanced supervisory measures for macroprudential purposes, these are now applied to a much broader set of insurers than those formally identified as GSIs. And lastly, through robust implementation assessment of the holistic framework supervisory measures, we can help ensure that these measures are implemented in a comprehensive and consistent manner across jurisdictions. So maybe talking a little bit about what our GME has found so far, and just to flag, it's a little bit early for this year's results. We'll be discussing them in 2 weeks' time. But last year's GME found that on aggregate, systemic risk scores in the insurance sector, well, they remain significantly lower than those in the banking sector. However, we did see a rising trend in total systemic risk scores in the insurance sector, mainly caused by increased interconnectedness of insurers with each other and with other parts of the financial sector and the real economy, including through their investments in illiquid assets, more complex over-the-counter derivative positions, as well as cross-border reinsurance. So coupled with the gloomy macroeconomic outlook and uncertainty in financial markets, I think for us, this means there's certainly no room for complacency. So we are keeping a close eye on these developments. Also, maybe to mention, and in April this year, we published the results of an in-depth targeted jurisdictional assessment of implementation of these measures, which shows that overall, there has actually been consistent and strong implementation of the holistic framework standards across jurisdictions, indicating enhanced macroprudential supervisory practices in the insurance sector, which is good news. However, it's not all perfect. It did flag some gaps in implementation for us to follow up on, for example, in the area of recovery and resolution, which, as you know, is a hot topic in other areas. Mm. Okay, so that was the holistic framework. And lastly, maybe just talk about some of our other work. As you probably know, a fair bit of our work at the IAIS also focuses on supporting a global supervisory response to accelerating and emerging trends in the insurance sector. So this includes climate risk, cyber risk, digital innovation, broader sustainability and protection gap issues, and more recently, a focus on diversity, equity, and inclusion issues, many of which I know are consistent with the issues that you are exploring. So I don't have time to touch on each of the themes, but I thought let me spend some time highlighting the work that we're doing on what is a priority topic, namely climate-related risks. So we saw in March, the IPCC published its latest scientific assessment, which made for grim reading. And for insurance supervisors, it reminds us that climate risks are very real and that supervisors have to take this very seriously. So the IPCC report was published as we were consulting on the first of 3 consultations to embed climate risk within our supervisory material. This first consultation, which builds on a number of papers that we published over recent years, closed last week. And I can say we're very grateful for the thoughtful response from the IAA. This first consultation proposed changes to the introduction to our insurance core principles to position climate risk within this global framework for insurance supervision. It also consulted on whether to make changes to our supporting material on governance, risk management, and internal controls. And it also included the final question seeking input on our overall climate-related work as we seek to develop a sort of globally consistent supervisory response to this global challenge of climate change. At the end of this year, we'll publish the second consultation to provide guidance for supervisors on conducting climate risk scenario analysis and to consider the risks of greenwashing and market conduct issues related to climate risk. And finally, in 2024, we'll issue a third and final consultation that deals with issues such as valuation, disclosures, and enterprise risk management. Together, these consultations will then ultimately come together to form an updated application paper on climate risk. Lastly, on climate risk, just to mention, I mean, we do see the impacts of climate change being increasingly evident, increasingly felt, resulting in significantly higher exposure for policyholders and likely also leading to significantly increased protection gaps as insurers either increase premiums or reduce coverage. So for us, from a supervisory perspective, it's essential to understand and address risks to help insurance markets work effectively and that they facilitate good consumer outcomes. So with this in mind, last year we formed a task force to consider the role that supervisors could play in addressing natural catastrophe protection gaps. So we'll be publishing a report on the outcomes by the end of this year. But really importantly, this work is meant to be a vehicle to facilitate good exchange at the global level, but also to seek opportunities for closer collaboration with partners on this topic, and ultimately to understand concretely what we can do collectively on these issues. And I hope have some concrete action points coming out of that. And obviously our work with the IAA, I think this is a prime area for cooperation. But before I finish, I would be remiss without lastly saying a very big thank you to colleagues at the IAA, Fred in particular, that have worked so collaboratively with us and our implementation partner, the Access to Insurance Initiative, to support supervisors in a wide range of jurisdictions to improve their actuarial skills, which I think we know is part of addressing these protection gap issues. So your efforts are very much appreciated, and a big thank you from me.
Thanks so much, Jonathan. It's a lot that you're busy with. Certainly have your hands full, as I think we have as well. When I look at the range of topics that have been discussed just in the last 2 days and the sessions that we've had here in Sydney. We've actually just come out of a session which the discussion was actually led by Fred on the banking failures, and you've mentioned the interconnectedness that you've been assessing, and the kind of systemic risks that can arise. So do you have any thoughts on the implications then of the recent banking crisis and how it crossed the Atlantic as well to Switzerland, and the implications for you as supervisors? Because as you said, you sort of pick up these systemic changes, but is that happening fast enough?
Yeah, thanks very much. Happy to talk a bit about that. I mean, obviously the good news is that the recent events happened outside of the global insurance sector, and so far without any significant impact to insurers. But certainly I think there's important lessons to be learned clearly for banking supervision, but I think we'd be remiss if we didn't think about the lessons for insurance supervisors as well, because you know, all subject to the same challenging microeconomic environment, the risk, the vulnerabilities that can come from rapidly increasing interest rates, liquidity risk, credit risk. I mean, I guess, as I said, the good news is that I think insurance supervisors have a much better toolbox for monitoring these issues now, and put in place supervisory measures which to be honest, most of these were already in place in well-managed insurers, but of course it helps create a more of a level playing field. But we also have a toolbox as supervisors to monitor and discuss these issues at a global level as well through our global monitoring exercise. So I'm looking forward to see what comes out in the next few weeks on this analysis of this very topic. But I mean, I guess a little bit of an initial assessment so far. Well, we know the global insurance sector has been resilient, but things we're looking at are firstly sort of direct exposures to the banking sector, and there it's quite interesting to see that this varies quite significantly across jurisdictions. So in some cases, that direct exposure of insurers is as high as 35%, but in most other jurisdictions, it's significantly lower. I think we're also, though, mindful very much of the indirect impacts of the macro environment. One thing to flag is I think we're watching sovereign exposures quite closely. So there's been a lot of talk about the banking sovereign nexus, but I think we have to be conscious also of the life insurance sovereign nexus, where we know that sovereign exposures are significantly more prevalent than financial sector exposures in most jurisdictions, and in some jurisdictions it's very high. I think we're also conscious that actually the structure of the financial market has changed significantly since the global financial crisis of 2008. So it's not completely clear how macroeconomic strains and vulnerabilities will play out in a sector where, for instance, non-banking financial intermediation has risen significantly. I mean, if we talk about lessons, and it'll be interesting to hear whether they're sort of similar to the ones that you've been talking about. I mean, one is, at the heart of this, it remains kind of plain vanilla interest rate risk.
Yeah.
And we know for the life insurance sector, for instance, actually higher interest rates could be positive, but it's really the pace of change in interest rates which can cause the vulnerabilities. With these very rapid increases, things like lapse risk, unrealized losses on fixed income portfolios, repricing of assets, increased credit risk, and sovereign risk that I mentioned already. I mean, I think we are broadly aligned with stakeholder comments that discussions for a while that traditional insurance business does not present a high level of systemic risk. But in our holistic framework, the focus is very much on activities. So if there are activities that are being conducted by insurers that start to approach those of banks or asset managers, you could see either business activities or products that may have higher liquidity risks. So if you have, deposit-like products that are subject to higher probability of lapse risks, that's something we need to look at closely. Another area we're looking at closely is the issue of hidden leverage that might arise from insurance investments in alternative investments where the leverage is a little bit less transparent. I would also say, lastly, in terms of lessons learned, what is new in a way, maybe two things. So one, I think, is the unprecedented magnitude of some of the shocks, which we saw a little bit in the UK LDI event, where those shocks are actually well outside of stress test shocks. And secondly, the unprecedented speed of market reactions to information, in many cases driven by sort of social media, and so on. So that's something we're analyzing as well. Thanks.
Well, those were exactly the points that we were picking up on in the discussion. So we're well aligned. So I mean, I think one of the things that we were flagging was, of course, that the liquidity, the knock-on potential of a liquidity crisis on insurance risks, which I think is what you have flagged. And of course, this is something now that we're going to be applying our minds to in terms of how the actuarial profession can contribute in this space. And we have some banking actuaries in the profession, so we'll case of watch the space, and we'll let you know as that develops. So I'm going to hand over to Nick now, but just before I do that, if anyone else has questions, feel free to be putting them on the chat, and we'll curate some questions towards the end of the session. But Nick, I think over to you.
Yeah, thanks, Roseanne. Yeah, Jonathan, I know when we talked to you earlier in the year, and you outlined the work plan, you talked about some of the operational resilience work that you were planning to do, and obviously some of us will have seen the cyber risk GMAR report, which came out what was that, probably in March, which was a really tour d'horizon, if you like, of the cyber risk space. And I think only this week there's your sort of note on operational resilience came out, which was very timely. I was just sitting at Heathrow Airport when that pinged into my inbox. So we'll certainly try and get participate in that. But I guess for others who are on this call, it'd be interesting to get your take on the key findings of that work on operational resilience, and any pointers that you might have for the actuaries here of things they ought to be looking at. We've certainly started thinking about cyber risk and what work we ought to be doing in that space. So I don't know if there's any particular points you'd like to draw out of that.
Thanks, Nick. Thanks for drawing attention to that. And yeah, we've been doing a fair bit of work in this area. So let me start with the issues paper. So so really what it sets out to do is to talk about some supervisory perspectives on impacting the insurance sector operational resilience, as well as approaches different supervisors have taken in response to this issue. So it's not quite yet at the level of saying, okay, these are good practices. It's more saying, well, these are the issues, and this is what supervisors have been doing in just different jurisdictions. So it's a good start. There are three main areas of focus. So one was, as you say, on cyber resilience. The second was on IT, third-party outsourcing, and thirdly on business continuity management in the sort of new world, and lessons from having to do business continuity in a sort of longer term over the pandemic. So for the cyber, what we did was we looked at the tools and metrics available to supervisors to assess an insurer's cyber resilience, and maybe that's where there's some room for some good cooperation, because of course those tools and metrics are the things that we would also be wanting to talk to actuaries and risk managers about. And we would, I think we must continue the conversation, because actually now, having done this initial work, we'll be thinking about how our work on operational resilience can best evolve to support supervisors and the industry in sort of keeping pace with these changes and if possible, getting ahead of these risks. So we look forward to that. I mentioned also the GMAR special report. I mean, this was particularly looking at cyber risk from a macroprudential perspective, and looking at how supervisors are actively developing and implementing macroprudential supervision frameworks for cyber risk. And these include incorporating cyber risk scenarios into stress tests. I think there's a natural area for joint work there. And what we can do more to collect data on common vulnerabilities. So there's a bit of a data theme, and seeing what can be done at an international level, I guess, to help reduce market fragmentation and see if there's any room for standardization. As you said, we also did a little bit of work on looking at cyber underwriting. So it's the other side of the coin. So protecting against cyber risks on the one hand, but also taking it on through underwriting. I mean, one issue we wanted to look at from a macroprudential perspective is whether, do cyber underwriting activities pose any sort of systemic threat to financial stability? And we concluded no at present, largely due to the currently limited volumes of affirmative cyber insurance underwriting. But I think the report did flag significant data gaps, particularly with respect to non-affirmative coverage. So it's I think something we'll be keeping an eye on. Yeah,
no, that certainly makes a lot of sense. Yeah, as I say, it's certainly something that we've been considering as an aspect that we ought to be, as an organisation, thinking about, and also talking to colleagues who are, seeing people who are, have been cyber underwriting, starting to do the cyber stress test and so on. So for us to understand what emerging good practices in that area, because it is a threat to all of our members who are exposed to it, but not everybody is so close to the underwriting as possibly certain countries are. So I think that will be something that will be interesting to share thoughts of on going forward as both of our both sides start to think about it. And as you say, there's an awful lot of stress testing there, which is very close to our heart, and understanding how, even if the actuaries, if there are parts that aren't involved in actually doing the stresses themselves, they're normally involved in doing the aggregation, in producing ORSAs and other risk reports. So it's something that I think our colleagues ought to be quite close to in terms of doing that. So that would be helpful. And I mean, we just wondered, obviously we've had in our bilaterals, we've had talks about areas where our two organisations can help each other. I know, is there anything that's on your agenda at the moment about that's relevant to the work that we are doing or could be doing that would support some of your other work?
Yeah. Well, I think you mentioned a couple of things. So obviously, first of all, the ICS, and as I said, most immediately, we'd welcome responses from the IAA and your members on the ICS consultation and ICP 14 and 17. And of course, we also very much welcome the work that you're doing to develop guidance for the actuarial profession on these new standards, on the implementation of these new standards. So that's very welcome. And we've, as you know, my colleagues have engaged with you, Nick, on that, and the regulatory committee. So that's one pretty significant area of work, but I think it's well in train. The second thing I wanted to flag, and I think this is going to be very interesting, is so we are in the process and just sort of started the process of developing our strategic plan for 2025 to 2029. So it's our next 5-year strategic plan. Next year is the last year of our current plan. So by the middle of next year, we hope to finalize this. And I've been through a few of them now at the IAIS, but it's actually always a very interesting and sort of reinvigorating experience, because it's a sort of once in a 5-year opportunity to sort of sit back a bit and think, like, what are the big questions? What are the big issues that we should be thinking about for the next 5 years? And so what I wanted to flag is, obviously, we're trying to get as much input and feedback into this as possible from our members, but also from stakeholders. So we'll be launching a stakeholder consultation on this next month as well. Actually, probably around the time that we're in Seattle. And we'd be very keen to encourage as many of your members, but obviously also the IAA itself to submit input on that. And the survey is one way, but I think it would be quite helpful if we sort of have a continued conversation between now and the middle of next year on these big sort of strategic questions. I mean, on the strategic themes, we touched on cyber, on the climate work. I mentioned the consultations, and it's been very helpful to have the work that you've been doing on these issues as well, and welcome the thought leadership that you've provided on that. And I do think, for us at least, this will continue to be a priority area. I mean, I think the reality of getting to net zero will be driven by the need for a series of very concrete actions in the insurance sector. And the actuarial profession has a really important role to play in driving this change, this transition. So
Is that, sorry, Jonathan, on that, I seem to remember at the SIF meeting when we were in Dubrovnik, there was that was one of the thoughts that they had about collecting more information on what insurers were committing to in terms of net zero.
Yeah.
Is that something that is being progressed?
Yeah, it's something we're progressing. I would say we are mindful of feedback that we've received that around things like data burdens on insurers and
Yes.
and not to get ahead of ourselves too much. So we are taking a sort of step-by-step approach, and not seeking to ask for a vast array of data from individual insurers. So we'll be looking to see how we can increase that over time, informed by discussions on the type of data that insurers are already collecting,
Right.
as to find a good balance there. But having that individual insurer data is actually important, because the sector-wide data is helpful for some things, but understanding the sort of variation across insurers is particularly helpful as well. And then lastly, just to continue the great collaborative relationship that we have also with the A2II on delivering training to supervisors on actuarial skills, which, as you know, is particularly helpful to our members in emerging markets and developing economies. So
Right.
I can say from our side, we see great value to that initiative.
Well, we have some questions flooding in here now, Jonathan. So actually, the first one is somewhat related to the point you've just made, which is about the in your April newsletter. You referred to the Climate Training Alliance. Could you maybe just give us a brief sense of what that's about, and if there's a way we can contribute?
Yeah, actually, that's a good point. It's it's a sort of joint initiative with the Network for Greening the Financial System, the NGFS, which is a sort of central bank and supervisor-driven initiative, which has got broad membership now, as well as standard-setting bodies. So ourselves, I think the Basel Committee is part of it, together with the Financial Stability Institute, the FSI, at the Bank for International Settlement, which is also a training and capacity building body. So I think it's a very nice initiative, because basically it's pooling the various efforts of these bodies and creating sort of one portal that people can go to for these resources and tools. So it's a good question. Let me take that away. I mean, I think certainly from our side, we'd be keen to see what can be done to tap into your expertise as we further develop that.
Excellent, because of course we've got the Climate Risk Task Force has produced almost 8 papers now, so there's a lot to draw upon in terms of material. We've got a few questions coming in online, so let me take the first one. Is what is the position of the IAIS concerning the postponement of the implementation of IFRS 17 beyond 2023 in relation to non-listed insurance companies?
So it's not an issue we talk about a lot, because it's somewhat outside our purview, our mandates. I mean, we're particularly focused on reporting for solvency purposes, as opposed to this financial reporting. But what I can say is that what we do is work a lot with our members who are obviously very keen to understand IFRS 17 and what it means for them as supervisors. So that's sort of our focus, is on helping to support our members. And I would say this is particularly, again, from emerging markets and developing economy supervisors who see IFRS 17 coming down the road and are like, help. It's a challenging standard in terms of the sort of the judgment that has to be applied, and then of course that places a requirement on supervisors to have a judgment on the judgment that's been applied. So that's what we're looking at, and we're working with the likes of the World Bank on trying to build capacity there.
So I think the next one kind of links to that, because it's around internal models, which of course are fundamental to the framework in many jurisdictions. So is that part of the upcoming consultations? And what kind of inputs are you looking for in terms of internal models?
Yes, so that will be part of the consultation that's coming up. It's also part of the data collection that we're conducting this year. And, I guess there'll be two levels to that consultation. One will be, what are thoughts on the inclusion of internal models in the ICS? And secondly, thoughts on how they're included, including, what would be the requirements from supervisors around internal models as well.
Excellent. Over to you.
Yeah, another one on the sort of on that capacity building point. We had a really interesting talk yesterday from Jan Kellett of UNDP about their, from I've heard in my notes, the global actuarial initiative, the GAIN initiative. Is that something that does the IAIS got collaborating with the UNDP at all?
I'm not aware of it, so that's interesting. Maybe we must. Either I'm badly informed, or else we're not.
Yeah, well,
I haven't heard of it before, so
I think this is one of these situations of joining up the dots, because I certainly hadn't come across it. I don't know that others had. So it seems to be a well-kept secret, but it's sort of going on, because we thought, oh, that fits in quite well with some of the other stuff that we're doing. So I think I'm sure we can share you the link you up, and we can all sort of join in together, because it seems a shame, because it did seem as if it was developing actuarial resources in some of the emerging nations that sounded very much in the same camp as we're already working in. Yeah. So that's good.
That's great.
Then another one, which is very topical, and I think you touched on a few minutes ago about emerging technology. And it was one of the question. Another question here is what work are you doing around the pros and cons, opportunities, threats of AI?
Yeah, thanks. Good question. Glad to get an opportunity to talk a bit about that one. This is, I mentioned one of our strategic themes is sort of digital innovation. And within that, actually our current main focus is on AI. So we are busy completing some work within our FinTech forum, looking at AI, again, a little bit along the issues lines, like what are the issues and what are we seeing in terms of supervisory responses. And then I think out of that, there'll be some thoughts on what could be further action. Of course, we've seen a phenomenal increase in how this has leapt up the agenda in recent months. So I suspect we will be doing further work. I suspect it'll be a big theme in our next 5-year strategic plan. I mean, there are questions, for instance, a number of supervisors around the world have started to put in place principles around the use of AI in the insurance sector. So there's I think, a legitimate question about whether there's a role for sort of global principles to help bring some maybe alignment, standardization, and help reduce the possibility of market fragmentation.
No, that sounds very similar to a discussion we had yesterday, where I think someone raised a point about our actuarial standards, where in ISAP 1 it talks about reliance on the work of others, and what does that mean if others includes AI? How is that going to work? And I think it's a very good point that the goalposts have moved, as it were, and I think so I'm sure that we're all thinking about this in a similar way and sharing thoughts on how we might both think about that. Is again probably a fruitful conversation for another day.
Excellent. I think we have a few questions in the room. Richard, do you have a question?
Yes. SCORE, Allianz, and AXA, after Munich Re and Re, withdraw from the alliance of big insurers for the net zero carbon at Horizon 2050. What's your feeling about that?
Yeah. I mean, I think where they're withdrawn for very specific reasons. I think it's reassuring to see that simultaneously with that, they put out statements of strong continued commitment to the aims that were set out by GFANZ. So my sense is it is not does not reflect a structural change in the commitment to helping to drive change. But of course, we will continue to have discussions with GFANZ and those groups that have left GFANZ as well to see.
Because one of the reasons that have been put forward is that there was risk to be attacked by the US people on antitrust, whatever, because it would seem to be too much an alliance that could hamper competition. So it becomes complicated.
Yeah, I mean, I guess it does become complicated. I guess this is a risk that insurers also face in other forums, industry associations, where I guess there will also be some thought given to whether there are motivations that demonstrate it's not an antitrust situation. So I think this is an evolving space. So we're open to discussions with how insurance supervisors can continue to support these efforts.
Thank you.
Thanks, Jonathan. Well, maybe just a last one from my side. You've talked about your DE&I initiatives as a key priority, and I guess the same for us. And I think we probably have similar challenges as global organizations in terms of what that means, and how we can both engage in sort of initiatives for ourselves as an organization, but also support our member organizations in their initiatives as well. So can you give us just a little bit of a sense of how that's moving for you, and maybe some of the any learnings you can share from that'll help us as well?
Yeah, no, I think this is a very interesting area of work that we're doing. One I'm personally very happy that we're progressing. So two aspects to our work, as you said. One's let's say a more external facing, and one's the internal facing. On the external facing, we put out a statement last year where we I think put out a very strong statement as a community of insurance supervisors, how we strongly believe that diversity, equity, and inclusion in the insurance sector can drive better outcomes, not only from a governance perspective, but also consumer outcomes, financial inclusion outcomes, etc. And set out a plan for us to do further work to help promote diversity, equity, and inclusion in the insurance sector. And so far, that work has really involved outreach to to both our members. So we've been surveying and discussing with our members to understand what they're doing, and also with stakeholders, including industry associations. And it's been heartening to see that a number of industry associations have been doing work in this area. And then we're going to sort of bring those lessons together. Again, it's a sort of step-by-step approach. We'll see what is happening in the landscape, and discuss whether perhaps it may be useful for us to also develop some sort of principles or guidance on this. So it's a, you know, some very interesting insights along the way around the sort of variation and the differences. But I think what was reassuring was that a good proportion of our members see this as either a very important or important aspect of their work. On the internal side, I mean, this is also very interesting. I think what I would start off by saying is the IAIS is an association of about 200 members, covering about 97% of the global insurance market. So we are incredibly diverse in our membership. But I think what's become clear is, diversity is a very good starting point, but you need to work on the inclusion aspects to get the most out of that diversity. So our focus at the moment is really very much about how do we promote inclusivity, and that's is around things like, what does the composition of our leadership look like when we have discussions? How do we actively make sure that we hear a diversity of views, encourage the voice from members that perhaps we traditionally haven't heard as much from, actively seek those out, and in our stakeholder engagements and events, making sure that we have a diversity of presenters, panel members, diversity of views in those discussions. So that's just a few examples.
That's great. Thanks so much for sharing that with us as well, Jonathan. And thank you for making the time to be part of our session today. I think we've covered a lot of ground. Any really last comments from you, Nick?
No, I think that was really helpful and very timely. I've got the Insurance Regulation Committee tomorrow, in which we've got a whole section on the IAIS. So we certainly will have plenty to talk about in that conversation tomorrow. So again, yeah, certainly for me, thank you very much for sparing the time to be with us.
And also thanks again for the opportunity as well to be part of the meetings in Seattle in a few weeks' time. Unfortunately, I won't be there, but it is fortunate because I have a graduation to attend. So a good excuse, I think. So I would be seeing you, but I think it'll be online again. So you'll have to come home.
You'll have to put up with me instead.
But thanks, Jonathan. Thanks so much for your time, and thanks also to your team who's helped us in terms of putting this all together. And we really do appreciate the opportunity to engage with you and to partner on a number of these topics. So thanks very much.
No, thanks very much. Have a great time in Sydney.